Hey, what's up, everybody? Welcome back to the Entrepreneur's Playbook, where we help 7- and 8-figure business owners unlock their financial superpowers. Josh Bowerly here with Ron Parisi. Ron, how you doing this week?
Josh, doing very well. Thank you. We got a good topic. So let's roll with it.
Yeah, well, I think we want to talk about the sweet spot that we see a lot of our clients in is that $1 million to $10 million revenue range. And just talk about what we see in that group, what challenges they face, what opportunities they see, what that roller coaster looks like when you're in that range.
Yeah, I was just saying, as a point of reference, right? That's once somebody makes it over the threshold of $1 million, right? They most likely have a product that's successful, right? Now it's like, how can I take this? How can I grow it? How can I maybe do it to scale? And that's where I think like your accounting, or I would call it more your financial strategy, really becomes a big part of your success or a big driver of your success. Now you have a product, you have data to know that you can be successful. Most likely you have some ideas about how you want to grow different revenue streams, different products, expand products, going up maybe to the higher level clients. So there's a lot going on in somebody's play, right? They hit $1 million. Now they want to launch into the 8-figure space. So there's a lot of, how do you manage that from a financial perspective? And that's our bread and butter. And that's where like I get the most excited about too as well. So
Yeah, for sure.
what are your thoughts when you work with a client that's 1 to 5 million? Hey, I want a 2x, or I want to 5x my business. What do you see as far as like some of their challenges?
Yeah, and I think the interesting thing is when people start a business, I still think that $1 million is like a magical number, right? Like I want to have $1 million business someday. And then you hit it and you realize it's really not all that magical in and of itself, right? It's just a number. But especially because we're talking about top line revenue, right? So $1 million business could still be making nothing. So I think that's a good point that I start to really dial in with people. And okay, you have $1 million business. How profitable is this business? Because I think we see early on people really focus on that top line revenue, right? Let's get the revenue up. Let's get the revenue up. And then we're at $1 million. Okay, let's start dialing in here. How profitable are we? Where can we either expand our revenue or start cutting expenses here that we can increase that profit on that $1 million? Because $1 million is great, but we have to have some profit there, right? So I think that's a good point to really start evaluating how profitable the business actually is. Where can you add or subtract from that business to increase that profitability?
Yeah, I think 9 out of 10 business owners are going to say, I want to grow top line, right? And I want to grow my way out of this problem, right? So if they have a profitability, a profit margin problem, they're going to say, oh, I need more sales. I need to grow my top line, right? And I would say they're most likely correct. But two is why profitability is so important, right? Is that growth eats cash, right?
Yep.
And cash can only be produced through two ways. One is profit, and the other one is debt. I think it's important to understand how profit is going to give you growth, or is going to fuel growth.
Yeah, and in some ways, more top line revenue can almost be more dangerous because there's only so much trouble you can get in when you're a $100,000 business, right? You start bringing in million, 2 million, 5 million, you're gonna be able to get a lot of lending, and you can dig a hole very quickly if you're not careful with that. So
Yeah.
I think that's where it's key to have those matrix and really look at everything.
Yeah, no, we did that piece on good and bad debt. So the audience maybe should take a look at that if you're really thinking about utilizing debt as a growth metric. But this is why, let's just get into the million, 3 million to 10 million to 12 million. That stretch is that this is why financial strategy becomes so important. And really, we talk about prospective. Let me just talk about for those folks who haven't really heard us too much. But prospective is, I want to do a 3 year, right? When are we going to hit 10 million? When are we going to hit 12? Is it 3? Is it 5 years? And then we just, okay, what's going to happen between my business at 3 to my business at 12? Like, where's that growth going to come through? So we've set some, I would say like a 3 to 5 year forecast as far as revenues. We look at, okay, what needs to happen? I need a bigger team. I need to expand my operations, et cetera. And we roughly put that out in a forecast, right? You don't have to put like exact numbers, but then we dial that back into a year, like a forward-looking budget, rolling 12 months. And that's your prospective plan. And why is that so important is that you don't want to get into a situation where there's going to be financial constraints to your growth. So it's so important to have this mapped out and to know what are the pinch points, what are the levers of your success. So you can, whatever hours you have, you can dedicate to those levers of success. And that's why it's very important to marry that financial strategy to your overall goal strategy.
Right. Yeah. And where it gets interesting and almost dangerous is once you're at this level, there's times you got to take a step back in profitability so you can take 2 steps forward, right? Like you've got to make that right hire that temporarily is going to reduce that cash flow and reduce that profit. And you have to do it. But that's where that's planning. If you don't have that year, 2 year, 3 year plan, you're just throwing stuff out there. Oh, I'll just go hire this guy and pay him $150,000 with no plan in place of what that's going to do. And maybe you get lucky and works out, and maybe you don't, and you're buried in a hole that is very hard to dig out of. I think that those forward-looking numbers are so vital once you get to this stage.
Yeah, just to reframe what you said is so important, right? Is that there's percentage of profitability and then there's actual dollars, right? And the key to when you're really growing and scaling a business, right, from 3 to 12, most likely your margins are actually going to go down. It's like you mentioned, there's just certain activities that all of a sudden now you have a team, there's certain overhead that you need to spend for, right? So your margins are actually percentage wise are probably going to go down, but your actual dollars should go up. And just acknowledging that and planning for that and understanding that is so important, yeah, to
Yeah.
our success.
Yeah. It's not taking shots in the dark. It's not how you run a successful business.
Yeah.
Just praying for luck.
Now, and everybody thinks growth cures all ills. And there's a lot of businesses that just have there's a lot of horror stories behind it. It's just, again, what we preach is just exactly know where you're going, have a financial strategy of where you're going, and then you can anticipate and make the great business decisions that all the great businesses do. So that's what we're trying to preach here. You want to talk a little about tax strategy as well?
Yeah. And yeah, why don't you get started? What are you looking at when we talk to clients in this range? What's their big tax concerns?
It's always liabilities, tax liabilities, how much they owe in taxes and how to reduce that. And I think that when you get over that $1 million business, all of a sudden, what did we talk about? There's like kind of the easy strategies, right? Managing your deductions, looking for some assets to purchase that maybe you can take bonus depreciation, 179 depreciation on. But really, when you get over $1 million, that progressive tax rate starts to really take a big chunk out of your bottom line. And just how to strategically plan and strategize for taking advantage of the tax as a business owner. There's an unbelievable plethora of like opportunities to save on taxes. And again, just acknowledging, planning for what that bottom line number looks like. What are we doing inside the business that we can take advantage of the tax law is built for incentivizing businesses and i.e. saving money for business owners. This is really where our tax team at CPA Fire and Andrew can really make a difference. Once you start making that money, once you start getting taxed a 30s effective rate, and then if you're in California, New York, that's maybe another 8 to 10% higher. So it really takes a big bite out of your profitability. It becomes so important to marry that financial plan with your tax plan. And that's where I try to really educate business owners to see what kind of money are they leaving on the table and how having that plan, both plans, the financial and the tax, working in conjunction with each other, really put the business owner so far ahead.
Yeah. Yeah. And I think what you touched on a little bit, I think this is the point when business owners need to start having a mindset shift, right? Where you're first getting your business started and you're worried about, on the tax side, you're worried about, oh, can I deduct this computer I bought from Walmart, even though it's half personal, half business? And I heard that I can rent my house to my business and save a little bit of money. And those are all great. And your accountant you should be taking every deduction you're entitled to. But once you're at this point, it's the big foundation things that are going to save you taxes, right? It's not getting that little computer deduction and renting a home office. And it's okay. Do we have the right entity structure set up? Do we have retirement plans? All the big ticket items that when you're paying $50,000 a quarter in estimated taxes or more, all of a sudden it's taking a chunk out of that instead of just a $500 computer deduction.
Yeah. And two is that it's just everybody wants to take a big swing, but sometimes it isn't, man. It's a lot of singles and doubles when you're doing tax plans. And just like you say, oh, it's just this, you start adding it up and you're taking a good amount of percentage points off your tax liability that adds up. And again, that's money that doesn't go to the government, goes back into your business that you can fuel your growth, right? Marketing, team, whatever's going to accelerate your growth, or conversely, build your personal wealth. In summary, it's super important. Have that financial plan. Know that, hey, I got to model out where my growth is coming from, what it's going to take to have that growth, knowing that maybe my margins are going to suffer, but ultimately I'm going to make more money. And what am I going to do about the money with that money that I'm making, right? Reinvesting that profitability back into company for additional growth, but also then marrying that financial plan with that tax plan, making sure that those tax liabilities and the strategies that are available to you as you're making more money really get implemented in a long-term plan. So,
Absolutely.
yeah. Hey, Josh, great always. I think that should wrap us up, but great being with you.
All right.
Any concluding comments?
No, I think, like you said, this is our sweet spot. So if you're in this position, I think reach out to CP on Fire if you don't feel like you're getting the type of strategy and planning that you need, and take a look.
Yeah, just be mindful that there could be big dollars being left on the table. We understand the business owner, you're busy, but there's big money that could be left on the table and that could be taken advantage of to fuel your growth. So always a pleasure being with you, Josh. Thank you.
All right, we'll see you next time.
Bye.